Hey everybody, welcome back to Chipstock Investor. We're going to be talking about one of our favorite EDA or electronic design automation companies, Synopsys.
Synopsys provides a little bit of a sneak peek into 2025 because of their fiscal year. So we're going to examine the slow growth outlook that they provided. The stock did sell off a little bit as a result of that. Is that a worry for Synopsys and the semiconductor industry overall? Of course, we are awaiting the big acquisition of Ansys. So we'll discuss Synopsys' portfolio of software, how they are adjusting that. And then the chip manufacturing reset button appears to have been smashed. Let's chat. Let's chat about that.
Before we move on, just a quick plug. We're headed into 2025. We're going to be addressing the semiconductor industry and how to invest in 2025 in the semiconductor industry in a series of ebooks. Our first video is going to intro the semiconductor industry. That's going to be coming out later this month. But after that, we'll be jumping to the EDA and IP portion of the semiconductor industry flow, which will include companies like Synopsys and Cadence Design Systems. Keep on the lookout for both of those. You can get access to them as they come out with our Semiconductor Insider membership, just $5 a month for a few more weeks. After January 2025, it'll be increasing in price. So check that out. Link in the description of our video for the Ko-fi page where you can sign up for that.
And the reason why we will start with EDA and IP after the overall semiconductor industry flow is it's absolutely foundational to the entire digital economy. And so today we are talking about the leader in EDA software, Synopsys, and its pending merger with Ansys. The number two company in that spot is Cadence Design Systems, a number of smaller businesses that play in this market as well. Mentor, now part of Siemens, or just simply called Siemens EDA, is kind of historically the third part of this oligopoly. But Synopsys and Cadence very much the two largest players. And these two large players have actually been expanding their reach beyond just electronics design and also working on the mechanical design world and converging the two parts together. That's why Synopsys is paying big bucks to acquire Ansys, which is a physics simulation platform, especially for various types of mechanical design and a lot of design work outside of electronics and semiconductors.
Let's focus a little bit on what the results were for Synopsys and their guidance for fiscal year 2025. As Nick mentioned, that will give us a little bit of a sneak peek into the coming year because their fiscal year starts a little bit early. Synopsys states that the growth rates are going to start to slow down. You can see around 10 to 11% expected in fiscal year 2025 versus 15.2% in 2024. That growth rate tends to follow the research and development spending of the industry overall, which in general tends to be around 8 to 10%. So with Synopsys decreasing that growth rate in 2025, really it's just returning to a more industry norm, but should see higher profit margin growth as the industry exits the downturn.
Now, before you start panicking and you see this big deceleration in revenue for Synopsys, there are a couple of notes you need to keep in mind that are affecting this slowdown. And the first and the most important one, as the CFO explained, Synopsys is changing its fiscal year slightly. So typically each year is a little bit different. Some years it's 52 weeks, sometimes it's 53 weeks. And in fiscal 2024, which just ended in October, they actually had a 53-week fiscal year. 2025 is going to be a 52-week year. And as a result of that, the revenue in the new year is actually going to be roughly $70 million less than it was last year. So that accounts for a whole percentage point decrease compared to last year. That's one major factor as to why Synopsys is reporting such a big slowdown. It doesn't look quite as bad as it may appear if you exclude the impact of that extra week last year.
Another factor to consider is that Software Integrity Group, or SIG, divestiture was completed on October 1st. Now that revenue is completely gone. Clear Lake and Francisco Partners bought that portion of the business now known as Black Duck. So all the financials are adjusted accordingly for that divestiture being gone.
In other words, that's not the reason for the slowdown in fiscal 2025, but you will see that group now not showing up in the financials going forward. That's the reason why. But another reason for the actual slowdown here, point number two, you probably are aware that a new round of export restrictions were placed by the US government on China. So that has affected Synopsys a little bit. Some of their software, some of their emulation and verification hardware that pairs with that software, it seems that they have some new restrictions in place, and that is throttling their expected growth from the China portion of the semiconductor industry just a bit. So again, not necessarily a Synopsys issue, geopolitics just having an impact a little bit here on the overall revenue growth rate.
And then finally, the elephant in the room is Intel. Intel has historically been the biggest Synopsys customer. And if you have been following at all what's going on in the semiconductor industry and with Intel specifically, you know that it's kind of a mess over there right now.
And so obviously Intel's issues are going to have an effect on Synopsys. Intel is trying to cut costs, and it's going to impact Synopsys just a bit.
Nick, I think you do need to add a little bit of nuance to this discussion because it appears that the overall industry growth has stalled out a bit. What is that going to look like going into 2025?
Yeah, let's delve into the nuance of that. And we have a couple of slides that might be getting really familiar to you now to help you understand what's going on. But we have basically two semiconductor markets happening at the moment. We have accelerated computing, AKA AI, and then we have everything else that is, what's called the traditional semiconductor industry. Accelerated computing, that R&D cycle, and then the on-ramp to manufacturing is already complete. And that's what's driving the growth of this industry right now. Now, the rest of the space, the traditional semiconductor industry, that's what the CEO quote is about right here. This on-ramp from R&D of next-gen chips, it could be for PC, smartphone, traditional cloud data center, automotive and industrial especially, the transition from R&D to the manufacturing phase, including for Intel, Samsung, Global Foundries, Rapidus, that's the new manufacturing hub in Japan. It seems that it's taking a bit longer to transition R&D work, thus the higher growth rate for Synopsys last year, to the actual manufacturing part of the chain, thus a slight slowdown in 2025. That is what we've been showing you here with this semiconductor end market cycle chart. You can see the first row there at the top, accelerated computing and AI infrastructure, still a new market, still in max growth mode, thanks to NVIDIA and all of their partners that feed into that massive supply chain that has suddenly cropped up around accelerated computing. But everything else below that, you can see, is either still bottoming out, auto and industrial, or still just very, very early on in the growth cycle. Things are just recovering much more slowly than anyone had hoped. So thus, that's why there's this appearance that for Synopsys anyways, and them giving this appearance that the industry is headed for a slowdown, needs a bit more discussion. It's not necessarily slowing down. It's just the recovery for the rest of the market is going more slowly.
I feel like maybe we haven't looked at this chart in a little while. So this is a good opportunity to talk about this again. It's a discussion we've been having over on Semi Insider. This is kind of our roadmap for the next 5 to 6 years for the semiconductor industry. And we posited there in 2030, there was possibly going to be an excess manufacturing capacity fallout from all of that global friendshoring and onshoring, all these chip companies building their fabs within their own countries to supply the semiconductors needed for their country. But we're actually seeing that happening more right now, aren't we, Nick?
Mm-hmm. Yeah, we definitely are. Intel, obviously, is the big one that needs to be talked about, but a lot of other companies kind of indicating that there is actually excess manufacturing capacity. A lot of this has to do with that slower than expected ramp up of next gen chips outside of accelerated computing. Other companies like Microchip, ST Micro in Europe, And others have sort of indicated that they are going to be scaling back their manufacturing operations a bit to control their costs and maintain a healthy rate of investment return. So again, like Casey said, join us in Semi Insider. We're having more ongoing discussions about this topic right here.
Before we finish out this video talking about Synopsys valuations, want to give a quick shout out to the sponsor of today's video and someone you're probably very familiar with if you watch our videos, finchat.io.
So these days, we've embedded charts like this from FinChat into all of our research processes. If you are interested in making visuals that help you understand how a business actually operates and how that pertains to the actual financial performance, FinChat is a fantastic piece of software, a complete suite to help you research everything you need to know about a business. It suits investors of all types. You could be a more classical value investor, or you can be focused on high growth businesses and the fastest growing, most innovative parts of the economy. FinChat has everything you need all in one place.
With our unique link in the description below, you can get 15% off any paid plan at FinChat. You can get that at finchat.io/CSI, 15% off any paid plan with that link. Check it out. You'll be happy it did. Speaking of FinChat, let's take a look at this chart that we created with Synopsys' GAAP net income and free cash flow. Tell us where we are, Nick.
Yeah, you can see substantial discrepancy between the two on the far right in the most recent quarter, Q4 fiscal 2024. I think it's safe at this point to sort of just ignore GAAP net income. Synopsys did get a sizable chunk of cash, as you saw earlier, from the sale of Software Integrity Group. Let's just focus on free cash flow for the moment. As Synopsys exits this latest R&D phase and new manufacturing begins to ramp up, it appears that the free cash flow is back on the mend. Catch our video that we did a couple months ago. Link to that right here if you missed that video.
And then let's just take a quick peek at the valuation. Price to free cash flow, 62x, and forward price to free cash flow, right around 47x. After that update that Nick just mentioned, we were warming up to the idea of starting to DCA or dollar cost average back into Synopsys, and that hasn't changed.
Yeah, the stock did sell off a bit after this recent earnings update. It's still up about 15% though from where we covered it last a couple months ago and talked about the business model. As Synopsys' free cash flow recovers in the next couple of years, we do think there is upside here for the business. And of course, Ansys, once that acquisition is completed, is going to make these metrics look very, very wonky. So if and when we fire up a DCA for ourselves personally, it will be very small. We'll approach this very cautiously, but these metrics, they do look like they are very, very high, a very premium price for Synopsys. But given the fact that we are still kind of at the bottom of a cycle for the whole semiconductor industry, we think these numbers are artificially higher than they actually appear to be because of the lower profitability the company has been reporting for a couple of years now.
Thanks everybody for watching this video on Synopsys. And before you click away, think about subscribing, hitting the like button, and sharing this video. We have a lot more content coming your way. We're going to close out the year, review our portfolio. We'll talk about that in an upcoming video, as well as our top picks for chip stocks, as well as non-chip stocks for 2025. And again, we have the How to Invest in the Semiconductor Industry in 2025 series. Don't miss out. Make sure you have notifications enabled. See you all again soon at Chipstock Investor.